Here's a beginner's guide to building credit. So in order to even generate a credit score, you have to have a trade line reporting to your credit report for at least 6 months. So the very first step to building credit is to establish a credit score. Now, a trade line is just another term for an account on your credit report. So I do have a formula that I would recommend that you do. Get at least 2 credit cards, and then get 1 short-term installment, at least 1 long-term installment, and then you want to make sure that you consistently report your utilization under 10%. A short-term installment is any loan that's under 36 months in the term length. And then a long-term installment is any loan that's over 36 months in the term length. A few examples of a short-term installment would be like a self-account, personal loans from your bank, furniture loans. Different banks will call it different things, but if it's a loan and it's under 36 months, that is considered a short-term installment. An example of a long-term installment will any car loans, any home loans, or any student loans. So if you have either of those, then you already have a long-term installment on your credit report. Here are some beginner-friendly credit cards that does not require any prior credit history. Get 1 or 2 of these so that you can have your 2 credit cards. At the very least, you do want to get a short-term installment. I typically recommend that you hold off on getting a long-term installment until you have generated a credit score. This is just to ensure that you'll get a better rate. You now have 3 payments that's reporting monthly to your credit report. You see, the more on-time payments you have reported to your credit profile, the more established and well-received your credit profile will be to lenders. Which brings me to my next point. Late payments absolutely kill your score. You see, payment history is the largest factor in our credit score. It's worth 35% of our score, which is worth up to 192.5 points. So even 1 late payment can decrease your credit score 50 to 100 points. So it's important that you make sure that you pay your bills on time. Credit utilization is the balance on your credit card versus the total limit that you have. So if you have a $100 credit card and the balance is $50, your utilization would be 50%. Utilization is a big factor in your score. It's 30% of it, which is worth up to 165 points. It is my advice to you that you stay under 10% of your utilization, especially in the beginning, so that you are making sure that you're maximizing these points. If you go off the industry standard, which is 30%, you're only going to be getting about 70 of these 165 points. Then we have credit age. Every single account on your credit report will have a credit age. Because it's an average, anytime you add or delete an account from your credit report, you will lose credit age, which can likely cause your credit score to decrease. Don't trip on that. That's typically a temporary decrease, and as you start to report more on-time payments, you'll gain those points right back. Then we have increase and credit mix, which are both equally yoked. They're worth 10% of your score up to 55 points each. I always say in the beginning, do not trip on increase. Within your first 1 to 2 years of building credit, you're going to get a lot more increase than you probably ever will in your entire life. And that's all the time I have. So comment below if you want me to continue this series. I didn't get to touch on my do's and don'ts of credit, things I need you guys to avoid in the beginning, things that you need to look out for, and so much other stuff.